All right, Franklin B. of Pantera Capital, thanks for joining us.
Of course, thanks for having me.
So here we are at MainNet. What is top of your mind, especially for what you guys do with VC? I mean, you are trying to vet these crypto companies. There's a lot of buzzy names, but as we know at Decrypt also, there's a lot of companies you hear about and then in a year, maybe they're gone. I mean, crypto, it's so new, it's so bleeding edge. What's your kind of process? What's exciting to you in the space right now?
Yeah, definitely. I mean, look, when we're at these conferences, we're trying to meet the best teams that we can and see what they're working on and what's exciting to them, right? I mean, a lot of the things that people talk about when they talk about, one coin versus another coin, one layer one versus another, gathering data on how to decide is really just about talking to the community, right? It's what are developers excited about? Where are they looking to build? And, that's probably the number one data point you can get, right? I mean, you can look at price all day, but where developers are getting excited is when they're able to build something that they couldn't build yesterday, right? And where there's something truly new that's being offered by building on one platform versus another. So we're always constantly looking for that. And I think the other thing that we're really excited about right now is just that looking back at 2017 and 2018, there's just so much more substance to everything, right? There's things to actually build with rather than white papers or PowerPoint presentations. And so what that means is the bar is that much higher, right? But it also means that when we talk to teams that are building in the space, we really want to hear, hey, what does your tech stack look like today, right? And I think from what we're hearing so far, DeFi, NFTs, Web3, those are all top of mind for everyone, but it's also new sets of problems that are emerging because all these things have launched. It's cross-chain infrastructure. How do you move stuff back and forth now that we're sort of re-dividing up the whole universe again?
So what would you tell the people out there who are, might have a good idea, have something built but maybe haven't dealt with a VC before? How do they get the idea before you? Maybe they're not as polished as someone who's done it 3 times. What do you like to see from someone in that situation?
Yeah, I mean, part of it is just loving to see the passion, right? I think the passion for the customer that they're building for, the problem that they're trying to solve. I think the other thing that we love to see is not so much a sexy PowerPoint or pitch deck. It's more how has the product iterated over time, right? I mean, one of the things that is really different about investing into blockchain and crypto is that almost everything is open source, right? And the pace of innovation is just 10x any other industry in the world. Right. So when you talk about the product roadmap, honestly, the best teams have their product change from the day one that we're talking to them to sort of day 7, day 8, and that's what we want to see is how quickly are you shipping products and what types of new innovations are you bringing in from the outside world? Because if you're not keeping up in that way and you're developing based on that traditional software method of, hey, I'm going to pitch to a Silicon Valley VC. I'm going to go heads down for 9, 12 months, come out with some big explosion. You're behind already in crypto.
That's funny, yeah, because Dan and I covered a lot of tech startups, and it was okay for them to kind of pivot a few times. Remember, Slack started as a video game thing, or I can't remember why. But it sounds like what you're saying, same phenomenon, but at 10x the speed.
On steroids, absolutely.
Let's talk about NFTs. You mentioned that that's one of the most exciting spaces right now, but also for what you guys do, we've talked to Dan Moorhead at Pantera, you're an investment firm. There's kind of, I don't want to say buttoned up, but there's a seriousness there beyond just everyone else in crypto land. And so you look at NFTs and for me, I mean, that's been one of the things that non-crypto folks have the most confusion about, and there's a lot that just kind of still can't quite get there. I mean, they can see, Bored Apes, and wow, look at the price going up. Yeah. But there's still a lot of people, there's a mental hurdle that they just kind of can't quite get past of, $300,000 for a digital image that I can view the image to and I can save it, and on Twitter you always see people, they say, there, I own it now, I just downloaded it. Right. Do you hear that skepticism either from existing Pantera clients or people, your peers in finance, and what's your kind of retort for why this stuff makes sense and why it's not just suddenly gonna vanish?
Yeah, it's a great question. I would say it's still a mixed bag a lot of the times. It's sometimes people get it right away because their kids play video games, something like Fortnite, and they say, hey, I totally get it. I've been buying V-Bucks every single day for my kid, and I know that I'd rather own what they're buying rather than not. And I think that's sort of one aha moment that people can have. I think the other is that, when we think about what NFTs are to this ecosystem, for us, it's that they're a richer file format than an ERC20 token, right? It's that when you look at a token that powers an ecosystem, right, and the fact that it's a single token on its own that someone may own some amount of, an NFT is that plus extra data fields, right, and so that design space is automatically increased because of that, right? So NFTs are not just about Bored Apes or CryptoPunks or art even. It's about expanding the design space for things like DeFi even, where the NFT file format can actually go in and expand the universe of sort of tokenizable assets and really take that to where we've been talking about this for years, where we can go into traditional assets, we can go into real estate, title registries, all those things. Because
Ask you about that, Franklin, because I remember covering this stuff about 5 years ago, and I remember there's like David Sachs, very smart investor, used to think Harbor, remember security tokens?
Absolutely.
That was gonna be the thing, like condos like on the blockchain, real estate deeds in New Hampshire and Vermont, and then it just didn't work. But now I'm saying, like in the Economist Big DeFi issue, they're like, mortgages, that would be a great idea. Dan and I both bought houses recently, and the paperwork, my God, what if you just compress that into an NFT? But it didn't work last time. Why didn't it work, and what could be different this time?
Yeah, I think it goes back to what Dan was talking about, which is investor appetite, right? I mean, I used to be at JP Morgan for many years and actually helped start the blockchain team there back in 2015, where a lot of the time we spent was actually on how do we create security tokens, right? I think back then there was an appetite for security tokens because on the one hand, you've got traditional securities with sort of the ROIs that traditional securities have, 8 to 10% a year, you're super happy, right? On the other hand, you've got this new technology no one's familiar with. How do you find that Venn diagram of people who love both of those things? Well, the answer was there wasn't anybody, right? I think today what we're seeing is a couple of things. One is less skepticism about tokens in particular, right? Back then we talked about enterprise blockchain being all about the blockchain, not about Bitcoin.
Blockchain, not Bitcoin. Oh yeah.
Exactly, and I think that there's a sort of small crack of light that enterprises are starting to see now, where they've realized, hey, wait a minute, tokens do make sense, especially in a decentralized platform, because something needs to drive that coordination mechanism, right? Something needs to be able to decide, if it's not a centralized player deciding, hey, if you and I want to do something on a blockchain and I want to go before you, who's going to decide that I get to go before you, right? Market forces. So market forces act through tokens to order transactions. And so boiling it all down into that one moment of if two people try to do something at the same time on chain, who makes that decision? A token can do it, right? And I think that little bit of sort of insight is helping open a lot more institutions to the idea that, hey, you can't just rip the token out of a blockchain.
But when's the UI going to get there too? Because I'd love the idea of to be able to buy my house on the blockchain and exchange a token. It makes so much more sense. We need the government, but else we need something better than MetaMask.
There's some friction.
Yeah, like what if okay, so I know how to do this, but my counterparty needs something as easy as a web browser to do it, and it ain't out there. Are we getting there?
Oh, well, NFTs are getting us there, right? Because NFTs are, sort of this extremely speculative part of the ecosystem today, but they're also a user training playground, right? It's, hey, you are going to buy your Bored Ape or you are going to buy something from your favorite artist. It's low risk to some extent, right? And so taking that first step in a low risk way where you're just doing it for fun actually helps train people to be ready when those things come, right?
It's an on-ramp.
Exactly, and it's kind of the same way that people had to learn first how to click a mouse, how to open a file directory, right? But they were doing it mostly for playing Pong.
Right. And so the experience will become native to a lot of people, but then I can't really see like OpenSea or Nifty Gateway pivoting into security real estate mortgages. So who's going to do that?
Yeah, so that's a really good question. I mean, we just invested recently into Maker's Place, and we think the way they're approaching fine art and just bringing artists into the NFT ecosystem
Tell us a bit more
is
about
really
Maker's Place.
differentiated. So Maker's Place, for those who don't know, is an NFT marketplace for art. And what they focus on is helping high-quality artists with a track record, with established fan bases, to issue NFTs and issue their collections in a way that is highly curated, right? So actually the Beeple sale that sort of kicked off this whole thing at Christie's was facilitated by Maker's Place. So you're going to see different types of UX strategies right? Different sort of pools of users that want to see NFTs in a different light, right? Some are going to be extremely buttoned up and want the whole story of what are the financials, what's the underlying legal paperwork behind this, and that's going to look extremely unsexy and traditional, like traditional financial
Oh
services.
no, legal paperwork, not that.
But others are going to be, professional art collectors who want to know the story behind the artist, the history or audit trail of past sales, and the sort of contextualization that they get when they walk into an art gallery and someone is telling them the story of why they should buy this thing.
You mentioned that enterprises are kind of finally seeing the light when it comes to tokens, which is really interesting. Now, of course, how does the SEC view those tokens? Because I want to make sure we ask you, especially with being in the crypto VC game, regulation is something that has gotten louder than ever before. It's a big story right now. It's unclear exactly what's going to happen, but boy, as we talk today, I mean, the SEC doesn't look that friendly to crypto. How much are you thinking about that as you invest in these companies? Are you asking founders, what's your plan when it comes to regulation?
Yeah, I think we always encourage our founders to engage directly with regulators. It's always sort of a nice strategy for them to have in terms of thinking about, hey, there is a lot of lack of clarity here, right? And I need to make an attempt because I care about doing this thing I'm trying to do, right? If you're investing in great entrepreneurs, sometimes they are looking to do something that's never been done before, right? And that leaves a really awkward place for regulators to come in and say, okay, you've never seen this before, I've never seen this before, but somehow we need to make it fit all the frameworks that we've had in the past, right? And so, having that kind of collaborative dialogue with regulators is, to me, I think probably the right starting point. At the same time, regulators have a really tough job, and I would say the SEC in particular really does too, right? I mean, one thing that they've always sort of alluded to is how do we apply the Howey test here, right? And no one ever really thought that the Howey test would try to be applied to anything in this ecosystem. So, one potential answer here is that there needs to be new legislation, right? That, we haven't updated our securities regulation in such a long time that it really needs to take into account the way that people can now invest their capital, access new investments, and play a role in creating a product that isn't centralized, right, and doesn't have a traditional board of directors or the traditional sort of investor protections that automatically come when you're a Delaware LLC, for example, right? So when legislators get to this, and hopefully they do, we're hoping they do for sure, we think that they'll actually do what they're supposed to do, which is be the voice of the people who say, hey, we want to be involved in this way, and figure out what the right balance is between investor protections and investor accessibility.
Bring it back to the technology as we wrap. When people show up and say, I want to do it, Ethereum's a default, right? Ethereum's king for NFTs and everything, probably makes sense. But we know Solana's had a lot of buzz, but how chain agnostic are you? Or in the back of your mind, are you thinking the same on Ethereum? So no, thank you.
I think we're about as chain agnostic as it gets. The way I personally think about it is, a multi-chain universe is inevitable, right? It might not be 1,000 layer one chains, and it might not be 100, but 10 you could easily see all playing a unique role in building something that developers appreciate and want to use for their application.
But isn't that just going to slow the adoption? In that we're trying to tell people how to buy NFTs.
Right? How do people know which one to choose? Like, do you do Solana?
And a Phantom wallet.
Polygon,
I mean, it's maybe it's not on a bad thing.
So here's the thing, right? Is I think we want to get to a point where that isn't a decision anymore, right? If you can throw enough capital and resources at cross-chain infrastructure, which is a category that we're really spending a lot of time on, right? You can build bridges that take one asset from one chain to another, or that help share data across chains. You actually create a universe where developers don't need to think about all the frictions between layer ones, because it becomes frictionless.
Who's best in breed for cross-chain stuff?
I think we're still looking for those teams right now. So actually,
There's the call.
There's a few that we're looking at today. We probably can't share them just yet. But I think for us, that is one of the new sort of problem sets that entrepreneurs need to go after.
Awesome. All right, Franklin B., thanks for joining us.
Yeah, thank
Great
you so
chat.
much for having me.
Great chat. Very smart stuff.